Africa Prime, brought to you by Jameson's Select Reserve.
If you look around the world, there's been almost no successful economy that has not had some form of industrial policy. Sometimes it's hidden, for instance, in the Defense Department, as in the United States, but the internet, which is the most important innovation probably in the world, was supported by the U.S. was basically an innovation of the U.S. government. So you have to understand that every country has an industrial policy. Sometimes they shape the economy without thinking about it. You pass laws, you liberalize, you regulate. In the United States, again, that our industrial policy led to an overloaded financial sector. 40% of all profits went into the financial sector. It was clearly a distortion and brought our economy down. So for Africa, where the problem is job creation, inequality, it's clear that markets have not provided the solution, not a surprise. And therefore, there needs to be a more active role for government. Markets are still at the core, but there needs to be a more active role for government to push, move, ensure that the markets perform the roles that they can perform.
You've argued that structural adjustment has effectively led to the deindustrialization of Africa. Given that that was part of the kind of, mantra that was preached to African governments for much of the 1980s and 1990s, leading to declines in your manufacturing sector and so on, or what little was left, how do we catch up, and how does developing coherent industrial policy continent-wide allow us to catch up? Is that even possible with, manufacturing giants like China and India and Brazil?
Oh, I think there's a real opportunity. In fact, one of the main thrusts of the discussion we had here in South Africa was that this was a moment of opportunity. Wages, real wages, cost of production are going up significantly in China. We looked at a case study, for instance, in Ethiopia, where if you looked at the cost of production, much lower, taking, wages relative to productivity, much lower than in Vietnam and China. There are bottlenecks. There are problems of infrastructure, again, a responsibility of the government. There are problems of access to finance. Often financial markets are more interested in lending to consumers for housing, for buying a car, than they are for creating jobs. And this is something that has to be addressed in a development agenda.
We've talked about infrastructure. You've just mentioned that that is a big component of what government brings to the table, particularly around industrial policy. But if you look at the African context, in some cases we have very dysfunctional states. We have states with very little capacity. How useful is industrial policy, in that context? And what do you need to do to beef up that capacity, across the continent?
Well, that was another question that was explicitly discussed. We had people from Korea, people from Mauritius. In many cases, the state capacity at the beginning of the transition of the development strategy was comparable to that, or even below that, of many African states. Per capita income, the state of government capacity in Korea was not very good in the beginning of its enormously successful growth strategy. So where capacity is important is really how you design your policy, what policies are appropriate. So for instance, infrastructure is part of an industrial policy. Every government has to build roads. If you don't, you have no hope. You have to build ports. So that's an example of thinking as you build ports, as you build roads, what is the direction of your economy? You have to regulate the financial sector. Every government does. Anyone that has tried to survive without it, it's been a disaster. So you're going to have to address the problem of how do you make the financial markets serve the rest of the economy. So you have to adapt to the capacities, but you're going to have to perform these functions in any economy.
Professor, talk to us about what are the lessons that we can learn from the Asian experiences, and can they necessarily be replicated? You spoke earlier about, capacity levels being at comparable levels, but I mean, a lot of Asian societies are quite closed societies, for example. So there's not a lot of negotiation around what it is that you make laws about. In a country like South Africa, we have a very active populace where people want to be consulted and spoken to and so on. We've seen with the e-tolls, for example, there's often a backlash, and it's not that easy. Development doesn't happen in that straight line. How do you take what was working in Asia, adapt them to an African context, given that societies are often so very different from each other?
Well, first I want to point out that when I said that the capacities were comparable to Asia, I wasn't referring to South Africa, whose capacities are much greater than the capacities were in Korea, say 40, 45 years ago. So South Africa is beginning with a big advantage. Now, one important thing is to have transparency, because citizens need to know what exactly the government is doing. You know, why is it doing what it's doing? I think that actually industrial policies, when there is broader citizen participation, can be even more effective, because what you're trying to do is enlist the strength of the entire society in moving in a particular direction. Make people realize that, look at an imperative for South Africa is job creation, creating more equality, and then have a nationwide discussion. What does that mean? You know, markets aren't doing it now. We're not getting it under the current framework. What are some of the possibilities for more effective job creation? What are the trade-offs? We have limited resources. How do we go about dealing with it? One of the important and controversial areas is macroeconomic policy, monetary policy. No economy can industrialize with an overvalued exchange rate. And countries that are resource rich, like South Africa, tend to have overvalued currencies. And there's a wealth of experience on how governments have succeeded in bringing down the exchange rate. And that's the kind of discussion that one needs. You know, some people say, for instance, that, oh, you can't do it because it's too expensive. Not true. China has developed with managing its exchange rate, built up over $3 trillion of reserves, a nice piggy bank when the economy, when there's a global slowdown, they can draw upon it. It really has worked both for growth and stability.
We do talk sometimes about special economic zones, but we see in places like India that it doesn't always work. It's not always successful. In South Africa, we've piloted some with a patchy and a mixed, result. It's early days, but the result is not necessarily what we thought. I mean, what are we doing, other than special industrial zones? What are the kind of interesting innovations that one can bring to industrial policy that speaks to the need to involve markets, but in a rational approach to planning the economy and economic development?
Well, one of the reasons for special economic zones reflects the scarcity of resources, that you may not have enough resources to provide the necessary infrastructure that you would like to have everywhere in the economy. So if we can develop the resources, the infrastructure, say, that is necessary for some cluster, some industries or some group of industries in a place, that will give them a competitive advantage. Another important insight, economist, is that it's very important for firms to interact with each other, to share their experiences, to get the input firms, the firms that they buy key services from, together with the firms. And so developing clusters develops these kinds of competencies, these kinds of networks. That's why in the United States we didn't have an industrial policy explicitly, but the government gave a lot of money to Stanford University, to Berkeley University, and around those universities we developed Silicon Valley, which has been really the key part of the success of the U.S. high-tech industry in the last 40 years.
So just let me expand a little bit on that. So what is the place of industrial policy in, this quest for knowledge-based economies? I mean, and does Africa, given the fact that it works off such a low base, can it actually, catch up? Can it actually interact at a competitive level?
Well, there are differences, obviously, for different countries. So talking about South Africa, one of the important things to realize is you have to enter into your development strategy at many different levels. You have a lot of unskilled people, but you also have a lot of skilled people. And so you're very well placed to you might say, enter into the knowledge economy. If you look, say, at other BRICS, take Brazil, it's been very successful in certain niches in technology, the best biofuel technology. U.S. can't compete with Brazil in ethanol. I mean, it's really interesting. We just can't compete. They've developed that technology at the global level.
So I suppose market-driven but policy-conscious, if you like.
Exactly, exactly. Now, in that particular case, in many of these cases, the Government Development Bank, called BNDES, played a very important role. They said, okay, we're going to help finance this kind of activity. The banks are a little bit nervous about long-term investment. Banks tend to be very short, commercial banks tend to be very short-sighted. Development is a long-term matter, and we're going to take the long term. And that's what the Development Bank has done with a remarkable success. Now, you know, part of the controversy about industrial policy is people always look at the failures. But if you only lent to successful projects, that would mean you aren't taking enough risk. The private sector fails. I mean, look at what happened in the United States in exit lending. So if you look, we've done studies of, for instance, the technology projects that the U.S. government has undertaken. The average return is enormous. We've had actually a very credible track record.